Are your savings just sitting in the bank earning crumbs? Or worse, collecting dust while inflation eats them up? Well, today I'm breaking down one of the smartest, easiest, and most beginner-friendly investments, or savings as I like to call it. And this is the money market fund. And don't worry, it's not as complicated as it sounds. But by the end of this video, you'll know exactly what they are, how they work, and how you can start earning from them. May I just give a disclaimer? Please, let whatever I am sharing serve as a base to your research. My aim of sharing this is just to stimulate your minds into deeper research, nothing more. So let's get straight into it. So what is a money market fund? Let's start simple. Think of a money market fund like a big savings pot where lots of people put their money in together, and then this money is then combined and invested on your behalf in very safe short-term things like government debts. So these are things like the treasury bills or commercial papers. And there can be more investments, but basically those are the main ones. So why are people running to MMF? It's because they are safe. And this is because they invest in safe, low-risk things. The second reason is because they're liquid, meaning you can take out your money easily in 0 to 3 working days if you need it for an emergency. Number 3 is they're regulated by the Capital Markets Authority, meaning they're watched and controlled by the government regulators. So they have strict rules to protect investors like you and I. Number 4 is you get daily income and compounding interest. So your returns are calculated daily. And number 5 is the MMFs have a low entry point. So you can start with as little as 100 to 1,000 shillings, and it often through M-Pesa. So nothing complicated. And the last one is these are just perfect instruments for short-term goals. So talk about your emergency funds, your school fees, rent, or even just business float, Basically, what I'm trying to say is money market funds are a smarter way to hold cash without locking it up forever. So let's run some quick numbers. Say an MMF is quoting a 12% gross annual yield. So if you invest 100,000 Kenyan shillings, gross return will be 12,000 Kenyan shillings. The government takes 15% withholding tax. That is around 1,800 bob. The fund manager charges 1.5% fees, which is about 1,500 bob. So what you actually pocket is around 8,700 shillings per year, or about 725 shillings per month. That's free money your bank probably isn't giving you. Now, you might wonder how exactly these funds are making this money. So how do they make this money that they pay us interest with? Here's how it goes. So when you invest money in a money market fund, your money is pulled together with that of other investors. And then this pot of money is then used by the fund managers to invest in various short-term investments. And these securities will usually have maturities of 1 year or less, nothing longer. So the idea is to balance the need for liquidity, that is having your money readily accessible to you, with a desire to earn a return that beats inflation. So from the returns they get from these investments, they pay your interest, and that's how you earn your money. Pretty simple, right? Now, it's good to note that not all MMFs are created equal. So before putting money in a money market fund, check, is it licensed by the CMA? So this proves that the government allows it to operate. Who is the custodian bank and trustee? So these are trusted banks or institutions that hold and oversee the money so that fund managers do not misuse it. Just like you wouldn't like an unqualified doctor to treat your health, so you shouldn't give your money to an unregulated or untrusted fund. 3, check the net yield, not just the gross. So yield simply means the return you can expect to earn, but the important number is the net yield. what you'll actually take home after the fees and taxes. Example, a fund may advertise 12%, but if it charges high fees, you might only end up with 10% or less. So always compare different funds and pick one that has fair fees, so you keep most of the money, most of what you earn. And then also, check how fast can you withdraw in the same day. Does it take 3 days? Because money market funds are designed to provide easy access to your money. Unlike other investments that tie up your money for a set of period, this is part of what makes them attractive for short-term savings or emergency funds. Make sure that the MMF you're eyeing allows for easy withdrawal without heavy penalties or limitations, just to ensure your cash is always within reach. Also check the fees and charges, because some funds sneak in exit or transaction fees, and they can be as high as 500 per transaction or as low as they can get. What your MMF invests in is also important. You need to know, is it putting money mainly in safe things like treasury bills and top banks, or is it relying much on riskier things like commercial papers? So just like you wouldn't put all your savings in one basket, a good MMF spreads its money across different safe investments. So if a fund depends too much on one type of investment, it's riskier. Safer funds diversify to protect your money, to protect my money. And also check on their transparency, their openness, because a good MMF shares monthly updates. So that is fact sheets. So you can see exactly how it's doing. Don't just look at the returns or the yield. Check if the fund is steady and stable over time. If the performance keeps jumping up and down, be careful. Also check online reviews to see what other investors say about the fund's reputation. In short, trust the funds that are open, steady, and have a good feedback. That's what I'm trying to say. So, how can you and I use an MMF wisely? What is its purpose? So you can choose to keep your emergency fund here. So instead of leaving your rainy day savings in a bank account earning almost nothing, put it in an MMF, because even a small amount, as little as 2,000 shilling, grows while still being easy to access or withdraw in case of an emergency. That money that you're saving for school fees, for a house deposit, or that holiday, the holiday you're planning to come and visit me in Australia, set an auto deposit every payday. Let it go to your MMF. Let it go straight into your MMF. In this way, your money grows while you wait to use it. So if you have that business cash that you're keeping in your M-Pesa, pack it here until you need to pay your suppliers. And in this way, it's earning money while you wait to pay your suppliers. Or you can even hold that extra cash you have no use for until you figure out what to do with it, or until that business idea comes up. I need to say this again, are not a wealth building investment. They are not for building retirement wealth, but it's perfect for short-term to medium goals. If you want something long-term, think stocks and shares, think bonds, think real estate, think retirement funds. Use MMF as a tool, not a magic bullet. Okay? So there you have it. Money market fund explained. Have you invested in an MMF before, or are you planning to open an MMF account and start your investment? Let me know down in the comments. And if you have any questions, happy to answer if I can, or if I cannot, I'm sure the viewers, the subscribers will have an answer and we can discuss it down in the comment section. If you found this helpful, don't forget to like, don't forget to share with anyone who might find it useful. Give me some love, show me some love, and I'll see you in the next video. Until next time, let's make money move smarter, not harder. And let's keep that wealthy mindset. And I'll see you in the next. Bye-bye.